Well, we just got another read of the housing market. Home prices continue to advance. It's against this backdrop that the government is announcing things to deal with this massive supply deficit that we have. The latest estimates suggest that we need about 3.5 million new homes to be built by 2030. Costs need to be taken out of the system. They've tried to work on that by removing GST on new rental construction. For a look at all of this, let's bring in John Pasalis, president and broker at Realosophy Realty. Thanks so much for being with us.
Thanks for having me.
So, I mean, we've thrown a lot at the housing market.
Yep.
All these rate increases, all these different little taxes in different jurisdictions, and yet it still shows, the data still shows what prices are advancing. But is that, you're literally on the ground in the market. What's actually going on?
So, yeah, I mean, I would not say prices are advancing. I mean, these Terranet numbers are lagging numbers. They're based on close dates, so they're based on sales that happened months earlier. On the ground, definitely prices are softening. If we look at median prices, average prices, even if we just look at individual transactions, we're down from the peak, from the peak of this year, which is around, I'd say, April or May.
So things are not moving, or they're just not going gangbusters like we're used to these bidding wars?
Yeah, so I mean, generally houses are sitting on the market a lot longer. There are far fewer showings, there are far fewer bidding wars, and prices are below what we would expect because there's just not as many buyers out there. I mean, if we look at low-rise home sales, in the Toronto area for the month of August, I think it was like the lowest number of transactions since 1998. Where people are just can't afford today's prices at today's rates.
What about sellers? Are they forced sellers, or what's the psychology like right now if you're selling a house? It's not a good market to sell a house.
It's a difficult market. I mean, recently, I would say like 8 out of the 10 calls we're getting from sellers are investors, who are trying to unload 1 or 2 properties. They're trying to unload some.
At a fire sale, or they?
No, not so many of them still have equity in their property. So it's not like they're underwater. It's not like the bank's going to foreclose and they just, they have to sell in a week. They're just over leveraged and they're just feeling the weight of higher debt payments and they just want to get some debt off the table.
Is that a leading indicator? Like, are these typically the ones to go before you start to see people who just own the home to live in it?
100%. It's, the people who exit the market first are investors. And listen, most investors are fine. There are thousands of rental listings that hit the market in the past month. But, you don't need a lot of investors to exit the market when your sales are also at 20-year lows to kind of tip things into a buyer's market.
Is this something that can turn on a dime if we get a pause on rates? I mean, the Bank of Canada's minutes just came out, and they are worried that just the very act of pausing is going to get people excited about rate cuts.
No, I mean, that happened at the beginning of this year.
Yeah.
But the big difference was when the bank signaled a pause earlier this year, rates were in the 5% range or high 4% range. Signaling a pause when mortgage rates are over 6% is not going to do anything. I mean, I think we would need to see rates beginning to drop before we get a little bit more optimism. So
we've been talking about housing, but the target has been on these purpose-built rental units, and condos is often where first-time buyers just try and sneak in, right, to get into the market. So what's the interplay, do you think, going to be like for people who are looking at condos, maybe now renting is a more attractive option?
So, I mean, renting right now is kind of more attractive because it's more affordable. Given rates at 6%, it's a lot harder to get in. I think if we see some downward pressure
people looking at $2,500.
Yeah, exactly.
Won't call that affordable. But
yeah, it's not affordable. I mean, it's less expensive than if you were to buy it and have to pay, 6% on your mortgage payment. But again, I think if we start to see some pressure on prices in the condo market, and I think we're starting to see that a little bit, that might tip things in favor of people buying, even if their payments are a little bit higher. Again, if people want to hold on to it for the longer term, they're kind of making a longer term play.
What about all this pent-up demand from immigration?
Yeah, I mean, there's still a ton of demand for housing, but the challenge right now is people can't afford today's prices when they're paying 6 to 6.5% on their mortgage and being stress tested at 8 and 8.5%.
That's right.
Right. And so what this is doing is actually putting a lot of pressure on the rental market, and the rental market is still incredibly tight. That's the one sector that's still very competitive.
We've heard a lot of people, particularly in your industry, complain about those stress tests, as those stress tests were put in place when interest rates were significantly lower.
100%. I mean,
I'm basically saying, do you want to complain about it as well?
No, I mean, I think they were actually a good measure. I mean, quite frankly, you know, at the end of the day, everyone thought it was ridiculous because no one expected rates to go up by, 2 full percentage points. And we've gone up, obviously, a lot more than that. So they're a good policy measure. And do we need them today? I mean, it's questionable, but the point is, I don't know if the policymakers want to stimulate too much more demand.
It's a fine balance. The conversation is increased supply. So the government's going to do what it can do at the federal level. In Ontario, you've had Doug Ford say, you can buy a house for $500,000. I'm going to get. But if you bought a house next door for $1 million,
yes,
you don't want the houses to be $500,000.
Yeah.
Are policymakers adequately weighing that side of things? Because if you're a homeowner, you don't want to see that.
You don't want prices to fall?
Yeah.
Yeah, I mean, and they
like
have
50%,
been. Well, okay,
no.
I mean, I don't think prices are going to fall 50%, but and they have been mindful of that. I mean, this is quite frankly one of the reasons why the big banks have been, extending amortizations on mortgages, allowing negative amortizations, which means their payment is not even covering the interest. This is all to, help create some stability in the housing market. So policymakers don't want price to crash. On the other hand, they can't control these dynamics. If there aren't buyers buying at 6 and 6.5%, you could very well see downward pressure on prices.
Let's talk percent here. What kind of pullback in prices?
I don't know. Am I expecting? I have no idea. I mean, again, I don't think this is going to be like a decline like we saw in the 90s, where it was a sustained downturn. We're probably going to have a 1 to 2 year downturn depending on how long rates stay high. I think once rates start to decline and hit 5 or below 5%, we'll probably see a rebound in demand.
All right, John.